Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Monday, May the 11th, the year's 2020. Let's talk trading. Types of misses. And you know, fellow traders, that these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And keep in mind, when you're trading, that you have your risk management in place so you don't lose any more than you're willing to lose per trade. In fact, I just responded to somebody out on YouTube, and they said something to the effect that, I followed your advice a year ago on these gap trades and I lost a ton of money. And it's like, you must have too, because you were quiet for 6 weeks. Well, number one, if you lost a ton of money, then you didn't have your risk management in place. Number two, I checked my video files. In fact, let's see, right here, and you can see here back a year ago at this time, I don't see any missing video files. And so I don't know what to tell you, other than it's you're responsible for your risk management. And finally, you're also responsible for your brain management, and that's going to bring us back to our topic of the day: types of misses. And in fact, I've got Walmall on the line, and that we were talking this morning, and he was saying, well, you should talk about this. And he made a statement about, there's a difference between missing out on a move and missing out on your trade, because if that wasn't your setup, then you didn't really miss. Isn't that right, Walmall?
Yeah, absolutely. And I mean, there are lots of times, you could be sitting there, sitting in front of your trading screen, ready to go, ready to click the button. And you don't. And the reason why you don't is because it's not your trade. It's not what you're supposed to be taking. Your setup didn't occur. And then all of a sudden, the market moves and it pops. And if you would have jumped in, it would have moved 10, 15, 20 pips or something like that. And you said, oh, I could have been rich. But, the reality is you didn't miss your trade. You just didn't get a setup. So you didn't miss out. And we have to go and, sit there and figure out how do we go and manage our brains in such a way to realize that there's no regret because we didn't get in. There's no regret there. The reality is our setup did not occur. So we didn't miss a trade. We just never got a setup.
Yeah, and that's so true, because there's so many ways to get into trades. And what happens is, if you've got too many setups, then if you find yourself always, clicking the mouse to enter a trade, you probably don't really have statistics on your side, because you're almost airballing. I mean, if you've got 20 different triggers out there, how are you going to manage that risk? How are you going to manage anything? Because chances are you have conflicting signals. This one says short, this one says long.
Yeah, you're exactly right on that, because, something I do have two ways that I trade. I trade the Walmart method, obviously, and I have one other way that I trade. And even with just those two, sometimes it's a situation of, okay, I'm getting conflicting messages here. I don't know which way to go. I'm confused. The market's confused. I start making excuses up. And so, my big thing is simplify, simplify, simplify. The old adage of KISS, keep it simple, stupid. And we have to go and do that. So, the reality is, I say this all the time. You got to wait for your train to come into your station for you to get on, so that you can go and take your trade. And the nice thing about it is the trains keep on coming. There's not a lack of trains. It's just that sometimes you just have to go and sit there and say, that's not my train. That's not where I'm getting in on. And, it's just not my setup. And so, yeah, I missed a movement, okay, because maybe it popped 10, 15, 20 pips, but I didn't miss a trade because it wasn't my trade to take. And if I start sitting there going and trying to go and trade every single movement that happens, you're doomed for, it's a fool's game. You're doomed to failure because you don't have in place everything that you need in place to go and make that trade. Or at least I'm not good enough to go and do that. That's for sure. I'm not smart enough to be able to keep track of all those different things that have to occur, and happen. And so, like, I know a lot of folks like to go trade different instruments, or and next thing you know, they got on the screen, we were joking around a couple of days ago that somebody wanted to go and put like 36 different instruments on your dashboard. And it's like, my goodness, how are you going to watch 36 different pairs? I can't keep track of one or two. And you want to track 36 of them? Man, that's craziness. Now what you're doing is you're trying to make sure that you don't miss any movements as opposed to missing your setup.
Yeah, that's true. I mean, especially if you're a little retail trader, and you've probably got less than 100,000 in your account, probably less than 50, maybe even less than 10,000. If you're trying to trade 36 different pairs or something, instruments, that just I think is just not the path to success. Not at all.
Yeah, it's exactly right. I mean, today on the pound, okay, I've made. I just went back and checked, and I made 5 trades on the pound. Okay, so it's basically been in now 4 hours. So in 4 hours, I made 5 trades. I had 4 opportunities for 4 trades. The trains, kept on coming, and that's great. And now today's been a very good day for me. The pound has moved very, very well, so I've made a bunch of pips. But the point is, in 4 hours, I was able to make 5 trades. I don't need 36 pairs out there. I don't need to go and have, this regret that I missed a movement, because there were several movements that I did miss. And the reason why I missed those movements was it wasn't my setup. It wasn't my trade to get into. And so for that reason, I think it's very, very important, because, if you try to get into every single, scenario and every single movement that's out there, you're not going to have enough time for your brain to go and react correctly. You're not going to have time for your brain to go and relax, because part of this all is that you need to be at the top of your game. Your brain needs to be able to function at the top of its game, so that you're able to go and react to what you see. Because if you're not reacting to what you see, you're doomed, and if you're just jumping in on every single movement, why did you jump in? What was the rationale for jumping in? Do you have a setup that you're supposed to be? Now, of course, you can also, jump into some trades that by accident that, okay, well, now that's why you get your risk management in place. That's why you got your trading plan in place. Okay, I'm in the trade now. What do? Does my trading plan say, okay, I messed up and I got in, get out? Does my trading plan say, let's go and ride this for a little bit and see what it does? I don't know. It depends on who you are. My trading plan says, get out. This is not my setup. I don't want any part of this. I'll take a 2 or 3 pip loss because I jumped in because I was impulsive. Somebody else may say, you know what, I'm in the trade, and it almost doesn't matter what my setup is. I'm in. I'm going to put in place my trading plan to go and ride this to what my normal exit plan would be. Both of them are valid things to do based on your trading plan, but wait for your setup.
Yeah. In fact, I was going to say, we had talked about the setup at the beginning of the last hour, where in that last 5-minute candle, the preceding hour, it poked its head above the 2300 and then closed below. And then when we had the new wall zone, you said you would have taken that long because of what the preceding candle did. Thought we should probably explain that to the boys and girls and non-binary traders out there.
What I've said in the past is that I always take the second break of a particular line within the hour. But what happened is that if you go back and look at that previous hour, what it did was it went on the 5-minute bar. You see that it penetrated through the 2300 line, and then it came back and closed below it. Because that time frame was so close, the next candle, when it opened up and then penetrated, I would have taken it. I didn't take that trade, but I would have taken that trade. That would have been a valid trade for me to take, because it was. I consider that 5-minute candle to be pretty close to what our entry would have been. It only makes sense. I don't need to go and have another confirming candle that this is going to go and work out. We've already driven out whatever anticipation it was for going across that line. So that's why I would have taken that trade. And if you would have taken that trade, if you rode it all the way to where it is, at the very top, it would have been worth 58 pips. Reality with my trading plan was, 10-5-1 is I would have gotten in and I would have gotten 10, 15 pips probably on it. But, it would have been a magnificent trade to go and take. That's a valid setup for me, But if you're trading, I would not say that that's truly a Walmart trade. It's kind of one of the things that's more an advanced technique, and I wouldn't necessarily want somebody who's just learned to go and trade with this method to go and do it straight out of the box. But for me, because I've watched it and I've done it a number of times, I'm willing to go and take that risk. Take that risk? That's because what I would have done was I would have had my proper risk plan in place. So if it did go against me, it wouldn't have been a big deal.
Yeah.
I would have stomached the loss.
Yeah, so it's kind of like, yesterday when I brought up the screen, all the gaps had filled, back to that one trader saying, well, why are we still talking about gap fills? Sometimes gaps don't fill. There was a couple pairs last week. I think there was 4 that didn't fill, and I think the pound was one of them. And if you had taken that trade, you would have missed out. Well, that's trading. That's why we have our risk management in place. So as Walmart just said, normally maybe that trade at the beginning of the hour wouldn't be a normal trade. But, if he's going by gut instinct or what he's seeing in the moment, he doesn't hesitate to put the trade on because why? He puts his stop loss. What's the worst thing that can happen? It hits his stop. So, we don't really have a crystal ball per se. I think I even wrote an indicator. I think I called it crystal ball just as a joke. But it was one of those things where, given enough time, it comes true. So the problem with that is that we either don't have the time and or the capital to ride out a trade that long to make it come true.
Yeah, and you think about that, what you say is so true. How many times have you gotten into a trade, okay, and it's gone against you? And the next thing it goes and hits your stop loss, but then an hour later, it goes, not only does it go back to where you would have been break even, but it even goes and hits your target. Well, here's the reality. We're retail traders. We don't have, most of us anyway, don't have $100,000 sitting in our trading account where we can go and stomach a 20, 30, 40 pip move against us, and not have a care in the world. Well, knowing that, then at that point, we go and take our loss of 10 pips or whatever your trading plan says to go and do. And, you just know that. But you also know that, I took the loss, but I also know that statistically my method will pan out in the end, and I'll make up that 10 pip loss plus some. And that's what we have to go and count on.
Yeah. And one of the other things is I was just, as you were talking, I was just running through some of the charts showing that we're putting in this nice, huge opening range for the week here, over 140 some pips, and how we also entered that we had an inside bar in the daily 4 days ago. Price entered it, and then I called the short at the 20, and that would have paid off handsomely. For the ranges, you can see we've got a bunch over 100 with the pound being at 154 for the day. We also hit a missed pivot, and just a couple hours ago we came out of that rat zone. You can see here the smart rat versus the standard rat, or you can't call it dumb rat because it's just a rat. But you can see here we hit that weekly pivot, and we fell right through. And then here, once again, we took out the weekly pivot. We still have a couple of missed pivots on the weekly this year, and out of that wick zone. And once again, we broke through the previous day's low for a very nice trade, horizontal line trade. And you know what, Walmart? The fastest 15 minutes in trading is up. So boys and girls and non-binary traders, just remember there's a difference between, you know, not being part of a move and then not paying attention and missing your setup, because it's not what you trade, it's how you trade it. So go out there and drain the banks and click subscribe.